Hello everyone, and welcome back to our YouTube channel. Today, we're diving into the intricate world of market structure, something you've likely never seen explained quite like this before. In our last section, I'll even teach you how to think and act like the big players, banks and market movers. So make sure to stick around till the end and take notes for that final section. And hey, if you haven't already, don't forget to give this video a thumbs up and hit that subscribe button. To start, let's address something you've probably noticed: how effortlessly the market seems to move. You've seen charts, but when it comes to predicting new data, it's like trying to solve a puzzle. This is precisely why market makers like banks often play with retail traders. Take a look at this chart. We'll delve into his smart money concepts later, but for now, imagine you're a bank holding $800 million worth of gold. How would you sell it? You wouldn't just dump it all at once, as that would crash the price. Instead, you'd sell it strategically, gradually decreasing the price over multiple moves. That's exactly what market makers do. Now, let's test your understanding of buy and sell psychology. In this scenario, is the market maker trying to buy or sell? You're right. They're trying to buy, but patiently waiting for the lowest price each time. Now, let's shift our focus to understanding market psychology on higher time frames. Market makers with their substantial balances are the ones driving market movements. Notice how the candles on higher time frames mirror those on lower ones. We'll save candlestick explanation for our next video. For now, concentrate on trading structure. The key reason markets trend, whether up or down, lies in the value of currencies, commodities, stocks, and more. Understanding the economic atmosphere is crucial. So, what is the economic atmosphere? It encompasses all news and events impacting currency pairs, commodities, and market transactions. When the market turns bullish, it means one asset gains strength while another weakens. Let's consider an example with the USD-JPY pair. If the dollar gains strength, what happens to this pair? Pause the video and drop your answer in the comments below. I'll address all your responses. You're absolutely right. The value of this pair will increase. Now, I'll teach you how to think and act like the big players in the market, banks and market movers. Grab your notepads. Here are the steps. Open your chart and identify major levels. Don't worry, we'll cover major levels in the 4th episode. Keep an eye on the news, especially regarding the currency you're interested in. You can find summaries online. Switch to the daily time frame and identify the trend. And ask yourself this: if you had $500 million and wanted to buy or sell this pair, when and at how many levels would you place your order? Go to Google and search for retail sentiment. You'll find a website showing other retail traders' ideas and their current positions. If most retail traders are doing the same thing and have placed stop-loss orders, wait until those orders trigger before entering your trade. Be patient and watch the magic happen. Over time, you'll gain the skills to predict and act effectively. Thank you for watching this video. If you haven't already, please hit the like button and don't forget to subscribe to our channel. Stay tuned for more valuable insights. Happy trading!